Hey everybody, I'm going to start posting YouTube videos again, just kind of walk through the futures trading. Interesting journey of myself. I've kind of did really well in 2024. At the end of 2024, I'd say kind of hit a little bit of a rough spot. Nothing super severe, just was trading the NASDAQ, was not really having the best time. So kind of went back to trading the ES now, but really focusing on the micro side of things. And I kind of want to get back and kind of make this more so of a trade recap in my thought process of how I've been trading. So to kind of give it a little bit of an overview here, right now we're looking at the MES, which is the micro S&P 500. So each contract is technically a tenth of the size. So I actually trade one full ES contract, but have it broken up with some runners when I do take my trades. This is a supply and demand based strategy, or you could even consider a support and resistance based strategy. But inherently, what I'm looking for my signals of entries is delta divergences within the footprint chart. So what does that really mean? Well, when we're looking at these footprint charts here, I'll kind of zoom in a little bit more so you can actually see a delta divergence occurs specifically. So footprint is where you can actually see the buy and sells. So right side's buy, left side sells. In order to see those footprints, or really that delta divergence is, okay, when price is moving in a certain direction, and I'm just focusing on this bar right here, is that an up bar, so a green bar, you'd expect it to have more buyers. So that top number down here is that delta, that's positive delta continuing to go up. So, but the delta divergence, which I think is a very strong trading signal, is that, you have a green bar, but it's showcasing more sellers. So in my opinion, that's where you get trapped sellers, where sellers are trying to push price down. You end up reversing out of this, and in my opinion, it causes a very strong squeeze, or high probability for a squeeze to the upside or to the downside, because you have more sellers and buyers inherently, but some larger player may be, picking up limit orders on that sense of it. So I trade, specifically the 12 range here. I look at the 15 range as kind of my medium to higher time frame in some sense. The 10 range as well too kind of acts as another confluence, as in like, okay, well, what I'm trying to look for is these larger gaps in price. This right here would be a new zone that I would actually draw here. So I actually did inherently draw the zone here. Again, looking for some sort of a base and a strong move to the upside, breaking out, previous highs. Here I'm going to mark it across all my charts. The 15 range is kind of my medium / higher time frame. And we're continuing to the upside. So I'm waiting for price to potentially pull back to the zone on the 12 range, have some sort of a quote unquote delta divergence push out. And then what I'd look for on even a very, very tiny kind of trade is that we're breaking, shorter term swings to the ups, or shorter term swings to the downside and or to the upside. Downside and or upside, in order to confirm some sort of a breakout here. So this would have been a pretty, it's not a trade I would have taken immediately, but on the pullback here, I think there's a high probability on it. So just kind of putting that all together. I did have one trade today. Honestly, it probably wasn't even that high a probability of a trade, but it did work out in my favor. It was here this morning specifically, actually right around open. In very short term, where, hey, we had a little bit of a push up here, a pull back here, and we're kind of ranging around this zone. Again, I've adjusted my zones. But what I really liked was that we had a delta divergence here. So I actually initiated a long here, had my stop below, the low. So we're risking around 4 or 5 points. We're actually getting chopped around for, 15, 20 minutes, which was very annoying. So I ended up getting filled on my 2.5 point target, and then actually had a runner for another 6 points. Could have held it way longer for sure too. Ideally, I probably shouldn't have taken that trade, but it did fit, my strategy. And the fact I usually look for 3 strong candles in one direction. Again, the confluence has to be in that lower time frame and that higher time frame as well too. One thing that I have added as well too, it's more so, and this is a 5-minute chart, is it's a delta volume profile, more so kind of a volume profile in some sense as well too. And so the way that I look at this is, okay, you get certain levels, there's actually a pretty nice free tool here. It's like this Chronicle IQ, whatever. It's pretty cool. So I've actually going back for a month, so showcasing all the trade data on there. But inherently, I want to match up some of my zones with larger levels of trading, buys and or sells. So one thing I found pretty interesting, we again going back to the footprint chart, we're looking at the overnight session. We kind of were getting rejected in this 6120 to what we would call maybe 615 zone. Well, if we look from the overnight session here, this isn't the best, but if we're looking at this red section here, we were kind of stuck between that same zone, 615, maybe 625-ish. So, if price is below this zone, you're probably looking for price to come up and then reject. Once you break through it, then on the other side of it, then you're looking for price to find support. And again, kind of going back to it, well, now that we have higher liquidity, higher volume traded here, well, if price pulls back, then I expect price to potentially bounce there. Even going lower, you can kind of see there's certain levels. I'd be interested in this 6080 level, that 680 level. Again, that's from multiple days ago, but if I go on my actual trading chart here, by some sense, I do have a level here around that 6080 zone. Again, kind of the same case, that base to the breakout to the upside. And if we looked at other time frames, it makes sense. So basically my strategy is that I wait for price to pull back into a zone, have that delta divergence, and then I take the trade. This works both long and short, but for me, that's my high confluence trades. Usually I'm taking off profits around 2.5 points, stop losses moving to break even, and then we're having runners as well too. So it's been pretty good. I'm just a little bit slower on my trades. Probably should let it play out a little bit longer, but I think there's a different opportunity for myself. Again, still trading funded accounts. Kind of blew up a couple trading the NQ, but I'm up to 6 accounts right now, and basically try to flip and trade one per day, or get a trade, switch to the next one, and kind of rotate throughout it. It's going to be a slower and longer process, but I think it's making me a better trader. So, all right, you guys have a good rest of your day, and hopefully you guys find these videos helpful.